All right. Well, sorry for the delay this morning. This has been a bit of a surprise. I was off last week, had some other things to work on. Back to doing my analyses again this week, and in the meantime, YouTube has apparently discontinued doing streaming with Google the way I always used to do it, so I had to completely figure it all out a new way this morning. Anyway, that has made for an interesting start to the day. I am Jonathan Van Kloot here to do a morning market analysis with you. It is Monday, August 5th. This will be my first analysis of August. And wow, boy, did I pick a week to step away. Because, man, we came down hard. Holy cow. Market, ES 500, or ES, S&P 500, that is, of course, has been doing higher highs and higher lows, but it was getting a little nervous right up here. It was not exactly just tearing through the previous sell zone and marching higher the way it had been, along here. And every time it made all-time highs, it would pull back slightly and then just charge right on ahead. And it didn't really do that again. So that was kind of cause for caution. But the big thing to watch out for was a break of this level here, or even actually really this level here. This was kind of the last higher low until this higher low was made, which almost kissed it, managed to hold above it, but that was already a little bit nerve-wracking. Market was barely hanging on to a higher low, and then it barely made a higher high, and then, of course, it took out this level here, and then things got ugly. And not terribly surprisingly, the only thing about this that kind of surprised me a little bit was I really expected this wave 5 to be a bit stronger. I was expecting a bit more follow through out of it. Instead, we got sort of a truncated wave here, and it's very, very short. But all that really matters is wave 3 wasn't the longest, wasn't the shortest, rather. So really everything is fine there as far as the wave analysis goes. Now we are in a correction phase, so the question is, where exactly is it going to stop correcting? So I've got our sweet zone plotted here, and we're already actually right smack in the middle of it, the 38.2 to 61.8 levels. Market has been selling off and selling off and selling off. You can see it since yesterday even, when it opened on Sunday. It's just been pretty much straight down, and that will only last so long. It can never move one direction up or down forever. And boy, look at the momentum on that on the 60-minute. That is huge downside momentum. So it's due for a pullback for sure, no question about it, or due for a bounce. And most likely what I would expect to see is an a B, and then a C to come down and maybe hit that 61.8, maybe even get down a little lower, like the 76.4, something like that. But, here's the important part. That all assumes that we are, in fact, in an uptrend. The one thing we have to keep in mind as a possibility is that, in fact, we're in a downtrend, and this whole thing here is an A, B, C correction of a larger downtrend, and that really we are going to continue down from here. Which way is it going to go? Hey, that's anybody's bet. No way to know for sure, but it's just something to beware of. Certainly, if this low gets taken out, then no question about it. We have got some serious downside to come. So market really, really, really needs to stay up above this low. And it's got a ways to go. Of course, it's only about halfway there right now. But it isn't out of the question for this to come down further from where it is now. But, of course, I expect a bounce up first and then a wave C down move to follow. So that is what I am looking for out of the S&P. But right now, anyway, we're certainly in correction phase. That does not mean go short, and I think a lot of people will probably do that this morning. There's probably a lot of people who have seeing this are just going to pile into the short side and aren't going to be realizing that this is going to follow an ABC pattern, more than likely. So that's unfortunate for them, but fortunate for those who take the other sides of those trades. So I would be watching for signs of it to continue higher, or to rather to reverse and bounce higher from here sometime soon. In the meantime, of course, on the smaller time frame, yeah, the direction we're trading is to the downside, no question. That is the predominant trend is to the downside. It is kind of weakening a little bit. The oscillator is no longer making lower lows, and price certainly is. So I'd be wary of that. I'd be looking for that bounce to shape up sometime soon. But it is most likely only going to be a bounce. I don't expect to see it break this high and continue higher. I expect to see that A, B, C lower. So just watch out for that. Correction periods can be a little dicey for people that aren't aware of what they can do and how they can behave. So just trade carefully. RTY in much the same boat, although it has already hit and even poked right through its 61.8 level of this entire move. And at the moment, I am thinking that this whole thing was really just a big wave one up. And this actually needs to move. I am rethinking my wave counts here on RTY. And that we now are looking at forming a wave 2 down. Of course, I don't know where exactly it's going to be done, so I'm just sort of sticking this wherever right now. But that is what I am hoping this turns out to be. Again, we don't know for certain. It could be something else entirely. It could be on a larger time scale. That what we have here is the failure to make a higher high, higher than this. And now we're going to take out this low and head lower. So it's going to be bumpy. We are going to have probably a bumpy rest of the year, I would say. On the shorter term for the RTY, similar to the ES, although actually a little more clear, a little more pronounced. Clearly, price is heading to the downside, but the oscillator is gradually building strength. So we have a very nice divergence shaping up here on the 60-minute. So I would be wanting to get prepared for a bounce. And again, for this to do kind of an A, a B, and a C. And C, who knows, it could fall short and land at the 61.8. It could come all the way down almost to the 100%. As long as it stays above this level, then we're okay-ish. I say that given that obviously that would be a huge sell-off in this market, a couple 100 points. So we just need to tread very lightly here and be ready to jump in, jump out. This is a short-term market at the moment. Volatility is certainly increasing. Fear in the market is increasing, and you're going to want to grab your gains and run. And don't be looking to this for real long-term plays right now. That's my opinion anyway. So currently, of course, the trend is down on the short term. That's the direction to trade, but don't overlook the fact that we're getting divergent here. So I expect to see this run out of steam here sometime soon. Maybe right at the open. Who knows? Maybe in the first hour. Maybe later today. We don't know. But that is what I'm expecting. So watch for a bounce. All right, crude oil. Crude also got just clobbered last week. Really right at the end of the week. Just got torpedoed and came down hard. And where previously I'd been kind of treating this as the end of wave 4 because it was what I had to work with, and it was right at the 61.8, and it kind of met our criteria in that regard. But in fact, we've had a much clearer A, B, C now. And so for the time being, my wave count now is down here for the end of wave 4. And looking for this to have upside here. As long as it stays above this, then I would say that this analysis is intact. And if this analysis, in fact, proves to be true, keep in mind that that means that it did come down into the end of what I've got here as wave 1. So we could see some significant upside from here. We will have to wait and see. We need to have this level be held. Got to stay above that for this to come to pass. Right now, of course, we had some huge momentum on that move down. And where did it go to? Right to the top of this buy zone way down here. And just kissed the top of that level. And then, boy, bounced hard. Look at the wick on that. Just a super, super instant bounce. And then headed higher, pull back. So looking like maybe that, something like that. So watch for that high to get broken. That will be our signal that more highs are to come. And if you want, you could, of course, draw a little trend line or something like that, give you a kind of an indicator as well, and look for things to head higher as long as this low gets held. As long as that is not taken out, then we're looking for higher highs to come. All right, gold. Not terribly surprisingly, gold has popped and popped nicely. So it is right up here, getting up into the sell zone up here. It has taken out the previous high, is heading higher, but boy, look at that oscillator. Boy, is that ever divergent. So just be careful. I don't know how long this move is going to last. So we've got significant resistance overhead. We did manage to break over, of course, this level already. We're sort of still playing with it right now. I wouldn't say it's definitively broken right now. It could kind of pull back at any moment, but it did manage to hop over that level, and now we're up into this big sell zone back here. And I actually, can I even go back that far? Let me see. Yes, I can. There we go. There's that sell zone from way back here in 2013. That was the last time we were up here. So this is ever so slightly off. I'm not quite sure what happened there. Actually looks like these are in the wrong place. Sometimes my lines get messed up for strange reasons. I think that's a little bit more like it. So in that regard, actually, now that I've put that in the right place, we're actually still a little ways away from the sell zone. So we've got a little bit of distance to cover. But to get up there, we are going to have to hop over 1500, which is going to be a very significant psychological level. The 1500 level has not been seen in a long, long time. So the gold bugs are certainly going to be watching this and cheering for gold. And I wouldn't be surprised to see gold continue to head higher for kind of as long as this correction lasts in the broader markets. But again, if we get an ABC correction in the markets where we go down, up, down, well, we may see the same kind of thing here in reverse, up, down, up, and then give up. So I just be wary of jumping in to chasing gold at this point. If you do, just make sure you have good stops and you are ready to jump the heck out of the way if all of a sudden it gives up and fails, because just looking at how divergent that oscillator is, that is concerning for sure. Short term, though, if you are a day trader, something like that, then the trend is up, no question about it. But it's also divergent even on the 60 minutes, so just be careful. We don't know how much momentum this is going to have in it, so trade cautiously. Natural gas also took a beating. Had a nice little pop here. It was looking like maybe there's some momentum to the upside, and then nope. Took out that low, and natural gas is almost the mirror image of the S&P a little while ago, in that it is at record lows, all-time low. It's never been down here before, so this is a totally uncharted territory. The only kind of semi-positive sign I can see here is that while price has clearly gone lower, look at that oscillator. It is, whoops, let's try that a little straighter. There we go. Oscillator is very divergent at this level, so that does not mean that it has to turn around instantly. Definitely not. But it does mean keep an eye for price action to be turning around, and look to maybe get on board with that. Although this is why we trade with risk management, good stops and position sizing, because we had that here where it looked like, okay, price is popping to the upside, divergent oscillator, great, maybe go long, and then came right back down again. So you need to be really cautious and make sure you're prepared to step out of the way. This time around, though, we do have that 60-minute shaping up very nicely divergent as well. So I wouldn't be shocked to see it kind of run out of steam somewhere soon, but I don't think it's quite there yet. It's still got a ways to go before the zero line is crossed, so this could have some significant downside further as the oscillator continues to get more divergent and kind of work its way up. So I don't think we're out of the woods quite yet on natural gas, and we could have a little bit more downside yet to come, but just be ready for that to turn around, because when it does, given that this is all-time lows, unlike being at all-time highs, how high can something go? Well, it's infinite. We don't ever know. There's no limit to how high something can go, but how low can something go? There definitely is a limit on that, so just keep that in mind. All right, let's finish up with Bitcoin. And Bitcoin is also the beneficiary of the lovely pop up here from all of this turmoil in the markets. We have gotten over this high. It is now, as far as I'm concerned, confirmed that we've got the wave 1 up, wave 2 down, and now wave 3 to the upside. That being said, the 161.8 is right here, and that is kind of the low end of our target zone, and the high end is the 261.8. So anywhere right up in here, which also, no coincidence, is our Sell zone right up there. So somewhere right around that 13,000 level. I expect to see Bitcoin run into some trouble and stall out a bit, but also consider on the daily, we just got over the zero line again on the oscillator for the first time since back here. So basically, since this wave started, we are finally working our way over that zero line, and that could be very significant. We could have some real follow through from that. We can see if I go back here what happened the last time. We went from, whoops, what just happened? I went to the wrong chart. The last time we went from below the zero line to above the zero line. Actually, I don't have enough data here to even show it, but it was somewhere back in here. And kaboom, huge explosion to the upside. So if we get something similar to that, or even a portion of that, then we could easily take out this high here and move to challenge the all-time highs. We'll have to wait and see, but it's looking good for Bitcoin at the moment. Definitely shorter term, the trend is up, no question about it. Oscillator momentum is building. Don't see any signs of trouble right now. Looks like we're just getting started. So Bitcoin buffs, hang in there. Got a ways to go, and enjoy the ride. All right, that's it for me. Take another quick peek at the S&P, and it is continuing to slide lower here on this 60-minute candle. We got 10 minutes to go in that candle, and right now it's looking like it's trying to push even lower. Will be very interesting to see what happens at the open. If we get a frequent occurrence, which is sort of a sucker move to get everybody to pile into the short side and then watch that market just reverse and take out all those stops and rocket to the upside for the B correction of an A, B, C. I'm very curious to see if that's in fact what happens and how things play out. So trade cautiously. This is a treacherous time for sure for those who aren't real confident in what they're doing. So if you need to, use smaller position sizes. If you're trading futures, don't forget you got those micros. This is not a bad time to think about playing with the micros because if you get it wrong, get on the wrong side of an ugly trade or something like that, micros, you're only going to be in it for 1/10 the amount per contract. So really seriously consider that. If you are trading futures, look to the micros. And if you're not trading futures, you might want to think about it. But in general, just be careful, all right? That's it for me, Jonathan Van Kloot. Again, I will do this on Wednesday. I am back in the saddle again for doing these analyses, and be keeping an eye on these markets, and we'll see what unfolds the rest of the day. That's it. Take care, everybody. Trade well. Bye-bye.